Hello, everyone. My name is Nathan Corey from Richardson Capital Management, and I'm joined by Dan Brown, our Director of Investment Management. And we are here today with our economic and investment update for the fourth quarter of 2024. Well, Dan, as we look back over the past year, I think it's safe to say that 2024 was a rather eventful year. We had a number of major headlines hitting the news with things like the, significant election, obviously, in the US in November. We have geopolitical risks ongoing really across the globe. And then, of course, we've got the issue of ongoing inflation and the future of interest rate policy in the face of that. But with all those headlines, we've still been seeing a fairly robust year in terms of returns in the financial markets, with really all asset classes posting positive returns for the year. That said, in the fourth quarter, we saw a little bit more of a mixed result. U.S. stocks performed very well, while we saw international and emerging markets struggle a little bit, and even we saw bonds dip negative in the quarter. Do you want to give a little bit more insight on what we saw?
Sure. So starting with fixed income, investors might be a little surprised to see the negative returns for the fourth quarter of this year, in spite of the fact that the Federal Reserve was reducing interest rates in the quarter. So starting in September is when they started with that jumbo half point cut, and then November, December, quarter point cut in each of those months. And I think investors would have assumed that fixed income would have done fairly well. It actually struggled. So we saw longer rates kind of back up. So, for example, the US 10-year ended the quarter and the year near about 4.6%.
Mhm.
But then we saw on the very shorter end, money market yields drop in coordination with the Fed rate cuts. But again, longer term bonds didn't perform so well. On the stock side, we continue to see strong earnings from corporations. We saw that pretty much all four quarters. And economic growth, I think,
Mhm.
continued to surprise to the upside to a lot of people. So we haven't seen the fourth quarter print yet for GDP, but it's probably going to be around 3%, which would be three quarters in a row now of 3% plus GDP growth for the US.
And Dan, as you noted, the Federal Reserve met in December and chose to reduce interest rates again by a quarter of 1%. And while that interest rate cut was widely expected by the financial markets, what caught a lot of investors off guard, perhaps, was the future expectations for rate policy by the Fed. Do you want to give a little bit more insight on what we saw there and what we're expecting going from here?
Sure. So the outlook from the Federal Reserve at the press conference surprised a lot of investors negatively. So again, as you mentioned, we got the quarter point cut that the markets and investors were anticipating. But what really surprised investors was the comments from the Federal Reserve Chairman Jerome Powell, and then the outlook for 2025 for interest rates. And basically, that outlook, which they publish kind of every other meeting
Okay.
cadence, basically showed that the outlook for 2025 interest rates isn't as many cuts as investors were expecting, for example, back in September. So the graph that we're showing here illustrates that. So the blue line, for example, is what the Federal Reserve was expecting for the path of interest rates in 2025. And then we overlaid that with the beige line, which is the December outlook. And you can see that that line shifted up, meaning that the Federal Reserve now expects less in rate cuts than they were expecting back in September. And that disappointed a lot of investors. We're not terribly surprised because if we sit back and look at the economic environment, it's still pretty strong. As we talked about earlier, GDP growth, three quarters in a row to kind of end the year here. Corporate earnings pretty decent. And what's a little bit troubling to the Federal Reserve is inflation.
Mhm.
Inflation is coming down, but it isn't coming down as much as they would like. So and that was the main reason cited for the higher path of interest rates in 2025 is just the fact that inflation is not coming down as fast as we expect. Don't think it's that big of a deal. Kind of expected to see that. Still have a retain a fairly decent outlook on interest rates. And again, it might not be as many cuts as investors were expecting, but again, the path is lower for interest rates in 2025.
Got it. And Dan, as we head into 2025, as we've mentioned, there's a few key risks facing the financial markets. Things like, a resurgence of inflation that would cause the Fed to change their trajectory of interest rate policy. We could see troubling corporate earnings that aren't keeping pace with the price that we're seeing in the stock markets. And then, of course, we've got a number of unknowns with things like government policy, economic activity abroad, geopolitical risks, and many others. In the face of all those risks, how do you view our sort of cautiously optimistic outlook going forward?
Yeah, so we still think the positives kind of outweigh the negatives. So that
Hmm.
was a good job summarizing the negatives. On the positive side of the ledger, again, we still see economic growth remaining pretty healthy as we enter 2025. So we talked about, probably about 2.5 to 3% GDP growth in 2024.
Hmm.
We think we could repeat that in 2025. Corporate earnings remain fairly strong as we look out for expectations for the full year. We're seeing expectations that all 11 economic sectors could be positive for the year. Haven't seen that in quite a while. And then what we also continue to talk about is just the fact of interest rates and what central banks are doing globally with lowering our interest rates. So we already talked about the Federal Reserve had a rate cut in December. We'll
Hmm.
probably see a couple more rate cuts in 2025. And then that theme is a global theme. It's not just a US theme. So for example, in the month of December, we saw, 4 or 5 other central banks around the world also cutting interest rates. So again, we think those tailwinds will outweigh the headwinds here.
Well, with that, we want to thank you for watching. As always, feel free to share this video with others if you think they might find it helpful as well. We value and appreciate your continued partnership, and we wish you the best for a prosperous and successful 2025.